What's up, everybody, and welcome back to the Traders Mind Chat live show. Today, we will be doing some live trading, open trades, focus lists, and in the neighborhood list. Looks like we've got some comments coming in already, too. Oh, Caleb in the house. Welcome, Caleb. All right, so bunch of stuff to talk about. Let's hop on into it. Share my screen and start doing some live trading. Let me see what screen should I be sharing? Here we go. All righty. Whoa, that's kind of funky. Why is that doing that? Going to stop that screen share for a second and put it back on. Was like flickering like crazy for a minute there. Did you guys see that? That was kind of psychedelic. But anyway, I think that it's fixed. Let me know if it's okay on your side. It looks okay on my side, but I just want to make sure that it's okay on your side too. All right, so live trading, open trades. We'll talk entries, targets, stops, and management. So in case if any of you are unfamiliar, the way that I always like to start with my live trades, my open trades, is to reset all the charts. Again, this is super basic. It's something that I preach to all of my members. I'm preaching it to you guys again here. Always start with your charts reset. Always start with your annotations off. Personally, if you know me at all, I love marking up my charts, like drawing all kinds of annotations all over them, marking up the patterns, putting notes on the charts. I love doing that. But when I am coming into a chart, I always like to hide all that stuff. So that way, each time that I'm looking at it, I'm getting a completely, the bias is removed. Okay, so here's a trade, and I want to start out with Bros. Bros actually closed out last week, but to give you guys some continuity with what was happening with Bros, just wanted to give you that and zoom in a little bit on each of these. And let me know, too, if you're able to see this okay on your end. Just come into the chat, let me know. And by the way, too, hit the like button, hit the subscribe button. That's going to help out the show as well. Back to this. So we've got 4 time frames up. We've got monthly time frames, weekly time frames, daily time frames over here, and a 30-minute chart. Now, the spot where I'm doing most of my work is going to be on the weekly time frames and on the daily time frames. The reason why is because I want to see a longer term setup that I could go in and surgically get into with a low risk entry point, be able to play that, and then see how it's going a little bit even more granular on the 30-minute time frame. So I like to use that multi-time frame analysis. So I'll make the daily chart a little bit bigger because that's where most of the work is done. And you can see over here, what I drew out was this double bottom in Bros. And I started that position back here on February 1st when it was breaking out. Melissa's birthday started on her birthday, my wife's birthday. So broke out, and it got to about 1 times my risk on that day. And so I'm immediately taking profits on that day. It runs up a bit more, gets close to 2R. I end up missing that. It comes back over here, and it was on Wednesday of last week that I ended up closing out the position, the remaining part of the position at break even. So a couple of things about how this trade went and how it was managed overall. And type in your comments and your questions too. I'm very interested to hear what you guys think and the questions that you have. So with this here, I'm using the on the entry. I'm using a buy stop limit order. The reason why is because I don't want to have to sit there and babysit a trade. All right, like I would rather just see ahead of time, like the night before, day before. Uh, where do I want to get into this trade? Where do I want to exit this trade? And figure out the whole game plan beforehand. Then it's just a matter of price crossing the level. So over here, right? And here's the flip side of that. If you if you automate your process, like I've done, right? Well, again, well, with the buy stop limit, and not waiting to get confirmation on the chart, well, with the volume, let's say. Like I didn't know that volume would be through the roof like it was on this day here, but it was. I'm sacrificing not knowing that ahead of time to not have to babysit the trade. And if I don't get the volume, then that doesn't necessarily mean that the trade is invalid. It just gives me a little bit less confidence on day one if it doesn't get the volume and move greatly like this one does here. Like over here, it's immediately a winner, and I love seeing that. I'm sure that we all do. Trade goes, comes back. I raise my stops to break even on this day, right? And remember, I got in down here. In fact, why don't I remove that other green line there so that way it hopefully it's a little bit clearer. So I'm getting in here, raise my stop to break even, and then I'm just coasting and price comes close to stopping me out of the remaining part of the trade, but I want to allow this other part to work. I want to allow it to the opportunity to run because if I take a little bit of profit somewhere in here, yeah, overall I have a larger percentage gain on that one trade. But I'm not interested in just this one trade. What I'm interested in are a series of trades, right? Like I'm concerned about 20 trades, 50 trades, 100 trades. How many trades am I going to make over the next month, over the next quarter, over the next year? If I'm operating the same way over those trades, then if I'm taking a little bit off over here, I might be winning more on this one trade, but and that's in hindsight, right? Like we didn't know that price was going to come back into the buy point. If price continues to run like it did with this one here, and I'm taking off the whole trade on this day, right? Let's reset this. So getting in here, taking off everything on this day because well, price reversed, and now it's a negative day, and it had like somewhat above average volume on the stay, not a whole lot. Didn't really get the oomph yet, but then over here, day four, it breaks out and it starts running. Then that would be the kind of thing that can keep your gains overall real small. Does that make sense? Does that make sense, everybody? Type into the chat. Let me know if you're following along. It's for that reason why with Bros, typing on the wrong screen. For that reason why with Bros, rather than selling over here, even though it did have negative reversal volume pretty high on the day, right? Like almost a double average volume, that I still wanted to play this out. And with the stop so close to break even right there anyway, like I've already locked in enough gains on this one. Just didn't work out, unfortunately. Any questions on Bros or APTS? Right, APTS still running. So this is where you would lock in a portion of your gains, allow the rest to run, and who knows how far it goes. You just continue to trail, right? And then that's how one trade or not. I don't want to say one trade, but a handful of trades that go like this can can help you, that can make a quarter, make a month, make a year. And it's one of the reasons why you don't need to have a huge batting average to win in trading. You only need to have like you could win, and I've been winning well with a batting average of about 45%. Right? How is that possible? Right? You lose more trades than you win. Like you must suck. No, it's the having your winners be dramatically bigger than your losers. In the case like this, right? That's paying for the other losers. So if you're pretty close to that 50-50 coin flip, then it becomes a mathematical equation where you want to keep your losses small, right? Keep your losses real small, and then have your gains be bigger, right? And then if you're able to stretch out some of the gains, and that's part of your system, right? So it's not just like sitting there and hoping for the best, but actually having a system that's telling you where are you going to get out of this thing. Then that's what we're aiming for. That's what we're aiming for all along. Here's another trade. This one, I want to show you a loser too. This one didn't work out, right? You might say, well, isn't it just still consolidating sideways? Well, it is, but here was a mistake that I did, right? Because I like to talk about my mistakes too. I'm not sure if everybody does. So on this trade, this one got pretty close to hitting my first scale out too. This kind of ticks me off a little bit. Uh, I should know better with this type of a stop. So on this day here, it's consolidating, it's pulling back, the volume is low, it's in a leading group. All things that I like, and that's part of the reasons why I took the trade over on this day here as it triggered. Um, the problem is that my stop was a little too tight, and I was probably, in hindsight, a little too aggressive on the entry here. Here's what I mean. Uh, if you notice that this bar that have my cursor on, there's a little bit of difference between this bar and that purple line, right? That's the 21-day exponential moving average. Yeah, you can see that there, right? There's about, let's measure it. Yeah, about 2% or so. Like it's not that much relative to itself. Maybe if I stretch this out a little bit, yeah, then that looks a little bit clearer. Yeah, you do have some airtime right there. So generally, I like to have the 21-day exponential moving average cradling my stop. Didn't have it there. I had the 10, but I didn't have the 21-day, and it came back to bite me. Price moved up, came through that nice little tight pivot there. Again, leading group. This one too didn't really have much volume, but we also saw with APTS, you don't always get the volume. This day seemed like a great support day today. Also, so far, a support day. I wouldn't say that that the idea is, oh, like this is going to roll over. No, I think that this is a case where my stop was just too tight, and perhaps even the entry over here a little bit questionable. And the reason why is because the 21-day exponential moving average hasn't caught up to the stop loss, right? Like so. Here's the thing: we want to try to line up uh, as many confluences around our targets, around our more importantly than the targets, around the stop loss levels, right, and around the entries. I think the appropriate order should be confluence around the stops, confluence around the targets, close second, and then your targets you should know where your trade is going, but of the three, the first two I think are dramatically more important because we end up exiting trades before price gets to a target sometimes, right? And there's a variety of reasons. It might be that price pulls back in, it might be that there's sell signals, it could be that you hit a trailing stop, it could be any number of things. So that's the reason why first thing that's most important, your stop loss. Second, your entry, close second. Third is the target, and it's a distant third. So come back to this, didn't have that, right? Like the entry, that as far as an entry point goes, it looked great. As far as a stop loss goes, it marginal. And in the type of market that we're in, marginal isn't going to get the job done, and clearly it didn't there. So that's bad on me. But hopefully, you guys see the mistake, and you can learn from it, right? Next, let's talk about focus lists. Or should I say, any questions on any of the trades that we discussed, the open trades, the APTS, PBT, or BROS, BROS? Any questions on any of those? Happy to talk a little bit more about each of them if you do have questions. Um, right now, I'm 100% cash in my swing account, in my uh, crypto account, and in my long-term account. 100% cash across the board, and so far, cash is crushing it this year, beating the indexes by about 13%. Anyway, let's move on to the focus list. Right, so every day, every day after the close, I am coming up with a brand new focus list. The way that I'm doing it, it's almost like a funnel, right? So some of you are already familiar with this funnel, but I'll draw it here. So you start at the top. You have a universe, right? So universe is up here. Then below that is your trade ideas. Gets better, right? That's somewhere in the middle. A lot of people stop there. I don't. I think that we need to keep working. Then we've got an in the neighborhood list. In, if I could spell, in the neighborhood. Jesus, can't spell, can't type. In the neighborhood. Then below that is the focus list. And a lot of people stop there, right? Like, but that's still not good enough. Then after that, right? Because not everything that's actionable is necessarily you're going to buy, right? None of those trades that are over here, if you could see those, I didn't buy one of them. None of them look good enough to me. So that's why at the very bottom of the funnel, I've got my action list, and the past couple of weeks, like it's been empty, right? Like I only want to put my money into the best of the best ideas that I find. And yeah, like every once in a while, uh, I'll make a mistake, just like I showed you before with PBT. But then other trades, like your Bros and your APTS, can make up for a little bit like that. But if and that's like somebody with 20 plus years of experience. If you are new to trading, like you uh, like you need a like you can see like how there's a difference and how there's levels to this. Because if you're just messing around, like you're just taking trades because you heard somebody say it on some live stream or wherever, like that's where you're entering the realm of gambling. So this is basically the funnel, right? So it takes a lot, and even above the universe, right? So this is my universe. Way up here is the full stock market, right? So 10K plus stocks. My universe is only about uh it's about 250 right now, right? So I've already filtered from 10,000 plus down to about 250. And then we go further and further down this filter, and that's how you finally get to the trades that we're going to put money in, right? And you could have an action list. That doesn't mean that you're going to take every single trade on the action list, only if it triggers, right? So only if it crosses through the entry point. So it's like filtering and narrowing down, getting the best of the best of the best. That's the only things that you want to be hitting your actual portfolio, because those are the things that are going to give you the best opportunity for success. Trust me, like this is the 20 years of bashing my head against the wall, or I should say 10 years of bashing my head against the wall, then finally figuring out after 10 years, then like starting to figure it out, still like building the reps, and finally being able to be doing this for a living here. That's basically uh the formula that got me out of the day job, or part, I should say, part of it. Yeah, because it's more to it than just building a funnel, right? So anyhow, that's that. That's how we move from the universe down the list, the focus list, and the action and the open trades. So on the focus list, right now we could talk about the focus list, the stocks that were actionable, but none of them were trades that I'd want to take. The best were like B-level trades. You might say, well, Mike, well, why is this one a B-level trade? Well, now it's actually tightened up to the point where maybe, like today, after the close, I'll do a little bit more work on this and take a closer look. This bar here bothers me. That sell off to the 21, that being on heavy duty volume, that bothers me a little bit, and so does this here. If you notice, the relative strength line is down over the past 7 8 days. It's one of those things that potentially throws this idea into the B category, like B level trade category. Um, I do what makes me like this trade a little bit more as of today, if you notice, right? Well, let me see how sharp you guys are. Type into the chat what's different about this trade here. Well, what did we talk about earlier that I might like on this trade? Type into the chat, let me know. If you get the answer right, I'll give you a prize. Got a lot of prizes. I've got prizes. Uh, I've got memberships available. I've got swag. I've got stuff that I could give away. Right over here, StockTwit sent me a whole box of swag yesterday. So yeah, for anybody that doesn't know, I don't know how much stuff I mentioned. I mentioned different things in different places, but StockTwits reached out to me, so I'm an ambassador for the StockTwits meetup in Long Island, New York, which is pretty cool. And they've been funding the meetups, in-person meetups, once a quarter, and they sent me 2 boxes of swag. Last time they sent me T-shirts. This time they sent me these pretty cool hats. Let me see. Let me undo this so you could actually see that. How cool is this? Right? Pretty nice felt hat here, or a jean hat, in this brown and in this blue. Pretty cool, right? Let's see. It looks like somebody typed into the chat. Who wants a hat? Scott says higher lows and lower highs forming on the wedge. Good guess. Not what I was looking for. Good guess. Not what I was looking for. Who else has an answer? Scott, you could go again if you want. Something that we mentioned earlier, right? Like, what was the mistake with PBT? That's the biggest hint that I'm giving you guys. What was the mistake with PBT that this one now has working in its favor. Or what did I say that PBT should have had that it didn't? Let's see. Who's got an answer? Should be playing the. I wonder if they have the Jeopardy theme song in this in StreamYard. Let's see. We've got some gold coins to give away. We've got some Halloween stuff here. Oh my goodness. But we don't have the Jeopardy theme song. All right, so it doesn't look like anybody else has a guess. So I'll give you the answer. So the answer is the 21-day exponential moving average. So today, uh, CNQ, it pulled back, it tested the 21 and it rallied. So if I enter above this high here, right? And so the overall pattern is this pennant that's forming. Pennant triangle like pattern. So it's got it kind of like this. Yeah, and this is where too, the pattern itself is a little so I would probably still give this one a B, but just to demonstrate here, what I would like about this is that it did start to narrow down, tighten up around the 21. It pulled back the past 2 days, and so I would be looking for a pop above this day here, February 11th. The high was 53.23. Looking for a breakout above there and setting my stop below this low, right? So below 51.19, somewhere below there. And the reason why I like it is because it has the 21-day exponential moving average supporting that low. So great guess. Scott, you were close. No cigar. And here, Janice, yeah, sorry, Janice. A moment, a moment too late, but you do have it, the 21-day moving average for sure. Yeah, anybody that wants to hit me up later on, like type into the comments. Like I'm happy to get you guys something. Uh, uh, maybe a pass into the elite program too. Uh, Caleb, I missed the explanation as I stepped away. Oh well, hey, yeah, snooze you lose, buddy. Sorry, Caleb and I go way back. Can we could joke around anyway? So that's CNQ. Problematic there. Let's see this. Yeah, this has a. So this was sort of setting up yesterday. Right today, this it fell below the 21, like kind of shook out there. So this is going on to the in the neighborhood list. But yesterday, what I saw, like it started to form this little flat top area over here. It had the 21 as a potential support level where it kind of shook out there. But here's the thing too. You want to have a pattern where it's not just kind of sort of like you want like a legit pattern. If I pop out to the the weekly, like well, what kind of pattern is this? This isn't like then you're looking like, oh well maybe it has the essence of a cup with handle, but it's flawed. There's a tons of flaws in this, and this is it's almost not like going to a personal trainer, right? Like so. Quick story. So I started going to a personal trainer maybe about 2 months ago, right? Like I've been a fitness enthusiast for a very long time. I've run multiple marathons. I've done Tough Mudders and all this kind of stuff. Was a member at Orange Theory of going to the gym all the time. Into personal fitness. Anyway, finally wanted to get to the next level of physical fitness. So hired this trainer, and it's like the reason why, and it wasn't just anybody, like it was somebody that I saw that was working with other people that were like I like the guy's attitude, and I also saw that he was picking up on like the fine tuning elements of like lifting things, right? Like so for today, for example, right? Like he's just like, oh, like don't have your hand like this, like have it curved slightly in some way. Like make sure that your elbow is forward. Like keep your hips back, right? Like all these fine little adjustments are the types of things where if you relate it to trading, come back over to trading, right? Where if you're looking at this and it's just like, oh, like that's a cup with handle, I'll just buy that. Well, look, the volume's starting to dry up over here. Like that's not a cup with handle, right? Like so, first off, like this handle, like if anything, maybe like cup with high handle, right? Like, but even that, you have your highest volume back here, right? That's the highest volume. Whereas that if you're looking at the handle starting over here, like it's just it's flawed for both of those reasons, right? Then you have 2 weeks in a handle. A handle should only be about a week long. It's a lot other things too, like time spent below the 10-week line, time spent below the 40-week line. Like that, like this is not a good pattern. So part of what your job has to be is knowing what makes a good pattern versus not a good pattern. Right? Like if you don't know that, then yeah, like you're going to start to run into other problems too. And you need somebody that like you could study this stuff. Like this is how I did it. Like I studied this stuff, and it's years and years of pattern recognition, like understanding like the nuances of the stuff. But if you don't have years and years to go and study that, like you got to get somebody in your corner that can point this kind of stuff out to you and can help you identify some of this stuff. And that's not to say that, hey, like I'm Mr. Perfect. No, like you saw that yeah, like I make mistakes too, but the like part of it is how we recover from mistakes. And are the mistakes all the time, or are they, we're all human, but we can and should strive to be the best versions of ourselves, right? Like each error is a learning opportunity uh, if we allow it to be. That's where things like journals come into play. So got multiple journals here too. Right? Like so this is my my trading or one of my trading journals. I like to keep a hard copy of it. Got personal journal here too. Big into journaling. Anyway, back to the stuff. Enough of a tangent. All right. So there's yeah, Hess took that off. Slumberger. Like just and this too, right? Like it's close to a potential pivot area, I could say, or a consolidation area, but not really. Yeah, like I feel like a B level trade for this is generous. And like there's elements to like, sure. Like it had the relative strength uh moving up through the roof. Volume had picked up nicely. Is this a legit pattern? Well, pop over to a weekly chart. It's if we're looking at this zone here, like you could make an argument that oh well, 1, 2, 3 weeks, like it's not really long enough for a base, and if you're in a market that looks like this, I'll just bring up the S&P. And like you want the best of the best. And even with the best of the best, you want to be trading small because not everything is going to work. So if your best of the best is going to struggle, like imagine your marginal trades. Let's see what else do we got. Yeah, in the neighborhood stocks. We don't need to go through all the focus list. Let's. Take a look at some of the in the neighborhood ones. Yeah, has got moved over. Yeah, here's some of the in the neighborhood ones that might be getting close. So yeah, and here's another problem with some of them, right? So in this too, things to be aware of. What's one of the problems here, right? Like my cursor's almost on it. Why might why might you not take this trade? Why might you not take this trade in MNRL? Yeah, second shot at a prize. Second shot at a prize. Type into the chat. Why wouldn't you take this trade? What flaws do you see, if any? Can zoom in a bit more. You could literally say just about anything, like Daryl earnings. Very good, Daryl. That's what I was thinking too. That's the first thing that jumped out at me. So you get a prize. Reach out to me. I will give you a special code to get into the elite program for free for a month. Yeah, generally, we don't give that out, but I'm giving it to you, Daryl. So email me, mike@marrowwealth.com. Claim your prize. Congratulations, Daryl. I need to get the little confetti thing that goes off. Um, Caleb has a pretty good answer. A little wide and loose, bouncing between the EMAs. Nah, I wouldn't take it. Yeah, like I wouldn't take it there either. Like so, it's tightening up a bit, right? And so that's why I like so anything that like was it on PBT that I did that little drawing? I think it was PBT. Yeah. So zoom in a bit and so anything that's a quote unquote trade idea, I could probably rename that to consolidations. Because I want to have an awareness of anything on my universalist that's consolidating that could potentially break out. Because there's solid information in that. There's solid information in knowing like what stocks are consolidating, not just because I'm looking to trade and place a trade, but knowing like which sectors are consolidating, which industry groups are consolidating. Because if let's say there's a dozen energy stocks that are all consolidating. That's solid information. That's just like great. Something interesting is happening or is about to happen with this group. Then I could go dive in deeper into that group and cherry pick which one I think is going to be the best of that group. Uh, Caleb, yeah, you're the best, and I didn't pay him to say this. As someone who graduated from Mara, the premium is worth it. Great educational value. Thanks, Caleb. I really appreciate that. Um, but yeah, like this, there's a ton of value in just knowing what trade ideas there are, what the consolidations are, like what's getting close, right? Like so your MNRLs of the world, right? Like I wouldn't buy this, but it's good to know that it's getting close because uh, one for the reason that I already said, just knowing which groups and what's consolidating and the quality of those consolidations, but also because it could be dramatically different in a couple of days, right? Like what's kind of today might be, hey, all right, in a couple of days. That just like how the one that we had mentioned before, right? This one here, where it was starting to get support around the 21-day exponential moving average. Yeah, that one's a little bit higher on the radar. Still think that it's a B, but overall, a little bit better. So bunch over here that are in the neighborhood. Yeah, and here's another one too, right? Like, so also stocks that are in the neighborhood, or in this case, an ETF, the gold ETF. I like to have ones that recently just broke out that are high on my radar, so that way, in case if they do pull back, I could start to look for a second uh, potential entry point. So that's another thing that the quote unquote in the neighborhood list helps to serve as well. All right. So those are the different lists. The open trades, we spoke about the focus list, we did the in the neighborhood list. Uh, let's do some open Q&A. Right, well, we're already a few minutes overtime, so won't be able to do too much open Q&A. Stick around for a few minutes here, depending on how many questions we get. But type into the chat, what questions do you guys have? What questions? Could be questions about anything, right? Trading related, uh, not trading related. Whatever questions you guys have, type it into the chat. Maybe you have a trade that you're considering. Maybe it's something related to journaling. Maybe it's something related to mindset, psychology, FOMO, right? Like FOMO, huge topic recently, especially with when markets get volatile, when the market starts to drop. Uh, all types of fears can come into play. Well, what's on your mind? Well, what kind of uh, things are you thinking about? Type into the chat. Let me know. Couple of quick announcements too. Now, of course, liking and subscribing to the video and to the channel, that always helps the channel. We want to help this channel grow. If you're finding value here, I appreciate it. Let's help spread the love. Um, Another quick, but a quick announcement too. So I'm working on my second book, and I am hoping to have that second book, the first draft of it done by the end of April, and have the book out into the world by the end of the year. As such, I'm going to start doing a little bit less YouTubes. So probably one or two per week. And I'm curious to hear too, like, well, what type of content do you guys value the most? So, do you value live trading the most? Do you value the stock market analysis the most? Do you value the interviews the most? By the way, I haven't posted it yet, but next week, yeah, on the 22nd, better better verify that. I don't want to give out misinformation now, but I'm going to have Leif Sereda on the show. So the guy that won the U.S. Investing Championship in 2019 is going on the live stream here with us. So really, really looking forward to that. Let's see, we've got a bunch of questions coming in now. Cool. Let's see. Caleb. Caleb says, "What do you think of gold? I entered yesterday at 174.20." Let's pull up the chart of gold again. Let's come over here. What's your name? My name is GLD, and here I am. um, I think. Well, yesterday I think that it's a little extended. You know what? I think that the intent of the trade, right, Caleb? So, what was the intent with the trade? Was this intended to be a day trade, a swing trade, a long term? Well, what was the intent, right? So, intermediate, long term. Oh, what were we doing with this, right? Because if I'm looking at it on a daily chart and you're thinking that, hey, I'm good planning to hold this for a year or better, like that might not be fair to look at this on a daily. Right? It's a bit extended. It started, well, what I started to notice, I think, was that it popped above this high over here. on the weekly. So let's see, what's the high? 174.67. So let's put this here, 174.67, just so it's labeled right at that level. So it started to break above there. We'll see what happens by the end of the week. So it caught me similarly back here. I was looking at it for a swing. Yeah, I had traded it back here when it started to pop out, consolidated briefly, and popped above here. Then it closed right back below potential support over here. Out. Was it there? No, I actually think it was over here. Yeah, and then uh, yeah, out right around this area. Then it shook out below uh, support from back here and right back up. Seems like it had the volume. But up here, like on this day, it's a little bit extended from the short-term moving averages. So it's already above the 5, above the 10, above the 21. I like how these moving averages, you see like how they're starting to fan out a bit? Hey, it's a sign of momentum. So I do like that. It pulling back here, I think, is perfectly within range. If I'm if I were to trade this and I'm thinking long term, I'm thinking my stop would probably be like down here, somewhere at the 50-day moving average. Um, that's kind of on the wide side. Well, not really, like 3.5%, but for gold, 3.5% is a lot, right? Because well, we have this down here, right? This PDR, percent daily range, one of the great indicators provided by our own Stuart Chalmers, another coach over at Mara, and it tells us the percent daily range over the past 20 days. Well, over the past 20 days, gold moves an average of 0.81%. So you're basically looking at what is that, about 4 times its daily range? It's a lot, but that's where your support really is. You could look at the 21. I don't know. I don't think that that's a great stop. I like structure. I like placing stops below price structure, so I would be aiming for a stop down there. But um, I do like the thesis. Like the general thesis with gold is, uh, yeah, like Caleb was saying, uh, hedge against inflation. It so there's inflation, right? The CPI numbers came out that shows inflation. Um, Fed rate hikes, that's another thing, and potential war, right? Like three big catalysts uh, that should be uh, able to send gold higher longer term. Uh, those are good fundamental reasons. Technically, yeah, I think that it broke out uh, over here. And this, and that's not even a great pivot right there. But um, if let's just say, for argument's sake, that we were looking at this as a pivot, right? That 130, the 173.15 level as a pivot. Okay, it broke above there and it pulled back, and now it's kind of futzing around that pivot area. It's squatted. I think that that's perfectly okay. Uh, I don't think that it's broken. Um, I think that the chart becomes broken when it starts to, if it starts to close below the like around 170-ish level, like that would be like starting to think aggressively that the chart is breaking down, but more so if it, let's say 2, 3 days later, a week later, all of a sudden you find yourself spiking below the 50, then I think that that's a broken chart for sure. All right, let's see. Question from Janice. Janice, do you scan for trades every night? Do you have set criteria? Yeah, yes, and yes. In fact, why don't I show you? So pop open MarketSmith. MarketSmith is a fantastic tool for screening charts. Something leaves a little bit to be desired, but the screening is fantastic. I love their screening. So you can see it's already opened over here. I have several screens that I run, right? So there's screens that I run 5 days a week after the close, or really 4 days a week. So I'm starting, like Monday is already prepared. So it's really running it Monday night, Tuesday night, Wednesday night, Thursday night, and then Friday I'm running my weekly screens, and you can see a bunch of them right there. But these are the screens, the daily screens that I run uh, at the end of each day. And yeah, by the way, this is actually going to be a topic for tomorrow, Wednesdays. We're doing so we meet twice a week with the Elite program. We meet for an hour on Wednesdays after the close, and it sounds like a pitch, but it's not really meant to be. But and we also meet on Saturdays for 3 hours. So this topic came up of daily screening and to go deeper into the different screens that I run and why I run them. So that's going to be a topic for Wednesday. So if you want to hop into the Elite program, uh, perfect timing. But just to give you a little bit of some of the screens that I run. So I'm running screens based on stocks that are have the relative strength being at their 52-week highs. I run several volume screens, and the way that MarketSmith is set up, these screens populate like after like maybe at around 4:45, between 4:45 and 5 o'clock Eastern. So that's why these aren't really showing anything. I'm actually surprised to see anything showing up on this one here. But there's all different kinds of information that we could get from running highly targeted screens. Then this one here, volume less than 50%. It's almost like a reverse pocket pivot. Um, I've been running that screen for a real long time. Just the other day, I heard Leif Sereda call a similar thing that he does and a reverse pocket pivot. So very interesting and very cool to see that how strategies can mesh and uh, yeah, very cool that U.S. investing champion and similar ideas. Anyway, and then one that where the stock is getting ready to close near its daily highs. So, and these are meant to be run at the end of the day, like by the close, because like closing near the high. So this anything that's passing this screen right now, right? Like Airbnb, right? Like it's near its highs, but who the hell knows where it's going to be in an hour? Maybe it reverses, right? During the quote unquote power hour that people talk about, uh, nobody knows. So that's why it's not just the screens, it's also when you run the screens, right? All those things very important. Then looking at stocks that are near the 21, stocks that are near the 50, and I've got this set up not to look at every single stock, right? Like to not look at all 10,000 stocks, right? So to come back to this here, all of the daily screens that I run did not run on the stock market. Not all 10,000 stocks. They only run on the universe list. And right now, my universe list is only about 250 stocks. That's it. And so I run loads of fundamental screens and distill the entire market down to a core following that meets my criteria, the criteria where, well, like I'm looking for stocks that can potentially move 100% to 1,000% within a year, couple of years. Stocks that are really like high octane stocks. Most stocks don't fit that, so that's why I want to narrow the list down and then only run these set of specific screens that I just showed you over in MarketSmith, uh, just on that universe. So that's the topic for Wednesday's discussion. Again, inside the Elite program, we'll be talking about that right after the close. So go check out the Elite program. Should probably show you where to to find the Elite program, right? If I'm talking about it. So marawolf.com. That's the homepage. You come over here to Elite membership, and it's right there. In fact, I'll even put it into the chat. All right. Anything else? I think this was a really, really good session. Yeah, I see Caleb likes the interviews. I like the interviews too. It's almost like the part of my personal development is doing these interviews. So I definitely love doing the interviews. Live trading is a lot of fun. We've got a lot of good conversation going, so I like that one as well. But yeah, I'm always interested to hear what kind of topics you guys are interested in and go deeper into any of those. But I think we'll call it a wrap here. So let me get the outro going. Then I'll say my little spiel. All right. So I'll see you guys back here tomorrow. Tomorrow we're going to do stock market analysis, taking a look at, and so another cool thing that I just started doing too. All right, well, like I've been more of the type of person that allows the market to do the talking. Now, right? Like watch what people do, not what they say. And I gravitated away from the news for a very long time, but I want to help debunk some things and also like maybe revisit some other things too. So what I started doing was tracking headlines every single day from a few select places, from IBD, from Market Watch, and also from Benzinga Pro. The people over at Benzinga hooked me up with the subscription to their pro stream. So that was pretty nice. So I'm going to look at that every day too, and just track it on the chart. So that way we could start to see too, like, well, people said that the market was doing this, and then like it could help illustrate a better feel overall for where we are in a cycle, and just like, well, when you start to think that the world is going to end, that tends to be can sometimes be the best spots to buy, but it's more about the overall psychology that the market is telling us. So if we learn how to read the market, kind of like how a musician might read sheet music, then that's how we could really learn to allow the market to speak to us. But till then, I hope to see you guys back here tomorrow, 2:00 Eastern, and have a great rest of your day. Take care. Much love. Peace out, everybody.
Hey, thanks so much for sticking around to the end. If you're new here, hit the subscribe button down below and become a part of the Mara Wealth community. And make sure that you check out some of the other videos on the channel. They're exactly what you need to see. And leave a comment down below. I read all of them. Leave a comment.